What's up, class? It's your boy, Mr. Marks. I'm here to talk to you guys today, do some review about the fiscal policy and monetary policy. So let's kick this off. Get this going, present. Let's full screen it. All right. So fiscal policy versus monetary policy. Let's start on the fiscal policy side. Could be what you need to do right now, actually, open up a Google Doc. You're going to type out these notes, and then that's what you'll submit as an assignment. So again, open up a Google Doc, pause the video, open up a Google Doc, and you're going to type these nice notes out as I go over it. All right, so pause. All right, we're back. Now, starting with fiscal policy, what is it? What is fiscal policy? Fiscal policy is how the government uses spending and taxation to affect the economy. Okay, the government raises revenue through taxation, and they determine levels of spending, and those two levels of taxation and spending can affect the economy. We've covered that in detail. Okay, this is also when the economy is in recession, spending is increased and taxes are lowered. Okay, that is to help stimulate economic growth. Obviously, if you lower taxes, people have more money to spend, right? And the government wants to spend more money to help create jobs. Okay, that is fiscal policy. It's just like in your home budget, you have a fiscal policy. You have to determine money coming in and how much money is going out, and how well your household is. That will depend on the levels that are spent. Just like how the government is will depend on how these levels are adjusted. Okay, when the economy is growing too rapidly, causing inflation, the government will increase taxes and lower spending. Again, when the government wants to kind of cool off an economy that's too hot, when the boom times are too good, and this can kind of create problems, and it can create a bubble where the economy kind of bursts. So in order to prevent that, the government will increase taxes, which will take money out of the supply, which will decrease inflation, and they will also lower their own spending to limit how many jobs are created through the government. All right, let's go on to monetary policy, which you have just done purely at home. So let's see what you know. The monetary policy, what this is in its basic level, is the actions of the Federal Reserve to help maintain a healthy and stable economy. Okay, the Federal Reserve Act was passed in 1913, I believe, 1912 or 13. This was kind of to help stabilize our economy, to prevent the major ebbs and flows that occur in the economy, which still, to a large degree, still occur. Okay, what tools do they have to accomplish this? The goal is to have a healthy and stable economy. So what do they do in order to ensure that? First of all, they regulate the money supply. They can regulate how much money comes in, how much money is made, and how much money they destroy. The Federal Reserve literally takes cash in and they destroy it. We talked about that at the Federal Reserve Bank in downtown Cleveland. If you take a tour there, they give you those souvenirs with some shredded money. So how much physical cash is in circulation can affect economics. They set interest rates. Remember, the Federal Reserve is like the big daddy bank, and all the banks that we deal with, like PNC, Chase, those are the little baby banks, and they loan from the Federal Reserve. The Federal Reserve sets those interest rates of the loans that they give to those banks, and then that affects the interest rates that we pay to banks like Chase, PNC, Wells Fargo, banks like that. They adjust the reserve requirement. How much money a bank has to have in reserve is set by the Federal Reserve. And they can adjust how much, they can make that less or make it more depending on the economic situation. They can also sell government bonds, which are basically like loans the government gives out. The government then collects interest on those loans. Kids used to get government bonds for birthdays. I don't know if parents still do that. But then as time passes, the interest grows, and then you can collect money from that. So a bond is just kind of like a loan the government gives in order to raise some revenue through interest. So let's go on. Hopefully you got these notes. Hopefully you paused it throughout, you typed it out, and you're ready to move on to the assessment phase of the lesson. So if you need to pause it and write these down or type them out, do that right now. All right, next slide. Economic downtime or economic boom time? So those are your two answers. Okay, look at the heading at the top. Economic downtime or economic boom time? Your answer is either downtime or boom time for all of these questions. Okay, you're going to type out the answers in your Google Doc, and then that's going to be in the assignment. So I'm not going to answer them as I go through it. You're going to type out your answer, and that's what you'll submit for today's assignment. So number one, the Federal Reserve, the Fed, you guys know that's its nickname, what's commonly referred to as. The Fed uses its monetary tools to increase the money supply. So in the time when when they're increasing the money supply, is it going to be an economic boom time when they do that, or is it going to be during an economic downtime? When does the Fed usually do that? Okay, the Fed announces that it will be lowering the discount rate to member banks effective immediately. Okay, answer that in your Google Doc. The Fed issues an order that raises the reserve requirement on all the nation's member banks. When do they do that? Downtime or boom time? Number 4, Congress recently passed, this is what happened just this week. Congress recently passed a stimulus package that will send checks of $1,200 to all Americans that make under a certain amount of money. I believe the highest income you can make and still get this check is $75,000, I believe was what I read. Parents will also get an additional $500 per child in addition to that $1,200. So when would the government do that? This is fiscal policy. When would Congress issue such a stimulus package to the Americans? Would that be during a downtime or an economic boom time? Number 5, the price of goods and services are rising so fast that the federal government raises taxes and cuts spending. Okay, the prices of goods and services are rising, so the federal government raises taxes and cuts spending. When would they do that? During a boom time or during a downtime? Okay, type out those answers. Don't forget to attach it to the assignment and submit it to me. And y'all have a great day. Peace.